I'm not late, never late. I'm here. My God, man, you guys complain too much. You know? If you think I'm going to be late, hit the like button. Simple as. What's good, ladies and gentlemen? So, happy Juneteenth, man. It's quiet across the board. Bitcoin ain't doing nothing. The NASDAQ is just being old NASDAQ, which will be closing soon. So just be sure that if you are trading futures, you're only going to get effectively half a day as such. The stock market is closed. No information from the bonds, the yields, the stocks themselves, but we've obviously got some changes in regulatory framework regarding what banks are allowed to do and what not to do. And this could give Bitcoin access to a nice bit of cash. Now, whether investors get involved in it is another story, but we're going to dive into it very shortly just to help you understand where we are. We're going to talk about these unrealized bank losses and where they are, but it hasn't been updated fully just yet. We're going to be looking at what's going on towards the end of the year of 2024. But when we get that information, when we look at it, it's going to give us an example of where we are right now. Now, firstly, I want to thank you all for passing through to last night's FOMC, which was probably the worst experience in my life. Powell was boring. And he pretty much said that inflation could go up. Tariffs are going to be the problem. Let's blame Trump. And of course, uncertain. This is what I didn't understand. He says, things are uncertain, but everything's okay. But everything seems to be uncertain about the path that we want to take. But everything's okay. Now, he has to quit. He has to quit. I think he should. I'm starting to not like the guy anymore. And I like everyone, but Powell is starting to wind me up. Anyways, we're going to be looking at a price projection from Arthur Hayes, and I'm going to be giving you the logic of why this could be the case. And I'm going to help you understand a certain way of looking at the chart so that you can work out whether or not it's likely to happen. All right? So make sure you stick around for that, because that's going to not take up the most of the live stream, but I am going to try and keep this live short and sweet. I say it every single time. But the markets are closed today. Obviously, crypto ain't going to be doing much. Well, we don't know that, but we ain't going to be getting that liquidity pump that we want. So if you are new, welcome. My name is Tino. This is Traders Reality, and let's just start it off with this madness right here. So the Middle East tensions, man, they're starting to get a little bit interesting. We've got this back and forth about whether or not the US is going to get involved in it. I'm seeing comments across the board about the Israel's defense minister says that Khamenei cannot continue to exist. It's just dead talk, all right? It's like Cold War kind of stuff. We're going to get involved. No, yeah, we're going to see where we are with it. I'm not interested. Oh, you know what? This should never happen. It's always going to be the case. Get ready for the biggest thing that's ever going to happen. I mean, you ain't going to tell us. You're just going to do it. And that's the problem that we've got. However, going into the article, this is something that you want to pay attention to. It says here that sentiment turned more cautious after Bloomberg reported that senior US officials are preparing for a possible strike on Iran in the coming days. So we know that the US is possibly going to do another, well, trying to get involved in this war. I think the market in principle would have already priced that logic in. I think the market would have already priced in the idea of rate cuts. I think the market has already priced in the idea that even if the US does go to war, there will be an initial reaction to it, but the market's not really breaking down as much as you'd be expecting it to. Quite frankly, it's holding up pretty well. But because of Powell's comments last night, pretty much giving us the idea that inflation is going to stick around, it would make sense with what Paul Tudor Jones had said, that inflation is more than likely going to creep up to around 3.5%, which is where he then started endorsing the idea of Bitcoin. I've said it before, guys. We need to see something happen financially for Bitcoin to step up, because it is deemed as the alternative investment, and that is evident with investors going into the ETF. But we haven't had that event yet. Everything that's happened up until now is just business as usual. You've got interest rate increases, decreases, market reacts. You've got a war, market reacts. But there's nothing that's actually happened that will grant the idea of Bitcoin making a move to make people believe, yeah, I should be getting into it. Let me explain. Here we go. Excuse me. So the expectation is July's rates are going to stay the same. 4.25, 4.5%. All right, cool. Going to September. All right. This is the new bets right now. And it's now stuck at this 30, well, 36% are going into 4.25, 4.5, and now they're edging towards 4%, 4.25% in September. When we get into October, so where it gets interesting. Now they're saying that they want 4%, 4.25, and it's still 4.25, 4.5%. It's still claiming a little bit of the bet, okay? Even though investors are like, surely they've got to cut at some point. Tariffs, inflation, and things that are going to cause inflation, it's just not going to be looking good for the Fed when it comes to hitting their target. Now, let me explain to you what's been going on in regards to this $9 trillion that could come into play with Bitcoin. Check this out. So Arthur Hayes has come out and said that there's going to be an injection of liquidity that's going to likely go into Bitcoin because of the Fed changing, or US framework that is changing the way banks hold assets, and of course what is required for them to trade and hold assets, right? So he says here that in a recent interview, Hayes outlined the view that approximately $9 trillion in liquidity could enter the US economy between now and 2028, right? He anticipates that this capital will initially flow into traditional sectors before filtering into risk assets like Bitcoin. Now, if Bitcoin's going to be a safe haven or a store of value, then the title of risk asset is no good for Bitcoin. So it's up there as a risky asset. Go below, it says, according to Hayes, regulatory framework adjustments will give banks flexibility to lend as they are no longer required to hold large amounts of equity capital against their treasury holdings. A comment right here. Mad love to you, Patriot. This guy, Sightbringer, he's pretty much explained the whole story. He's going on the idea that it's a diversion, which is why we've got this story about Iran and Israel. That's really grabbing our attention when realistically what's going on is the market is actually struggling. The US market is saying, look, just if you want to borrow, if you want to trade, you want to do all of that, don't worry about any of your, how can I put it, your assets, all right? You don't need to worry about having them matched to your treasuries. Just chuck money at anything that you want, okay? And that sort of thing reminds me of back when the subprime mortgage came into play, the crisis, all right? What was the reason for that? Because banks were just throwing money left, right, and center. Now, this logic right here says the following. The US government has quietly initiated a stealth liquidity backdoor for banks by easing capital requirements on treasury trades. This means banks no longer need to reserve as much capital when holding or trading US government debt. Why is that a problem? Well, US deficit. Not just that. You've got the idea that a bank can effectively come to you and be like, do you want some money? And you're like, yeah, man, I need the cash. Okay, cool. Just take this. Don't worry. And the bank's like, yo, what you doing, man? Like, can we actually afford to do that? Don't worry about that, man. We're covered anyway. US Treasury says do it. Just do it. So this article right here goes on to say the US government is issuing $1 to $2 trillion in new debt every quarter. Foreign buyers like China and Japan are net sellers. Okay. So domestic demand is not keeping up and yields are becoming increasingly unhinged from real risk. That is subprime mortgage crisis all over again. Now, if you go back to every single crisis that has happened in the past, it always leads up to an event or something that has changed or behavior's not as normal, and then the result of it leads to your crash. You can't reset the market. There's so much value locked into the stock market right now. You need a correction. What's the stock bond ratio about? Well, the stock bond ratio tells you whether stocks are overvalued in comparison to the bonds, and that's the truth because stocks are at near their all-time highs. So we know that there is a split right there. So we need to now just see stocks get to a discount. We need to see them being cheap again, which would then imply the reset. This, for me, is the bubble. This is the bubble. And the fact that they've done this is now going to push more banks to offer trading, to start trading more, and just taking on risk because the market is become quiet. There's nothing happening. People don't know where to put their cash. Okay? Now check this out over here. This is the state of banks' unrealized security losses, okay? Hasn't been updated yet, but going into December 2024, right? This is the funny thing. Most of banks' assets are made up of treasuries, it says here, residential mortgage-backed securities, treasuries, commercial mortgage-backed securities, and just other bits and bobs. The dark one, as you can see, that's where the majority of their capital is sitting. And it's currently trading at a loss. Currently, right now, if we look at it, it's around $500 billion. Okay, so how do you ignite the possibility of money being made? Well, give them more access to it, all right? But come on. When's this going to get reset? This has been happening since 2022. They have not seen any gains since 2022. How are they actually operating? How are they even declaring a profit? I'll tell you how. Go back and look at every single bank, right? Whenever they've declared their earnings or anything like that, it's all because of trading activities. Investors coming to them and saying, I want this, I want this, I want to do this, I want to do this, and they're just charging them for it. But when it comes to their holdings, they're all in a drawdown. And this was exactly the same thing with the subprime mortgage crisis back in the day. Well, look, residential mortgage-backed securities is the largest weight of loss in their portfolios. Now, going into this story here, it's like, okay, then we've got a massive war going off and no one's really paying attention to what could effectively happen. Now, quite frankly, guys, nothing's going to collapse. I'll probably pull out one bank and say, all right, crash that bank right there, get rid of that, and then we'll just restart as normal. But isn't Trump trying to reduce the deficit? How is he going to encourage people to start buying the US debt if he's planning on increasing the debt even more? Doesn't make sense, does it? He wants to do tax cuts. Deficit goes up. Welcome inflation. So it's like we're kind of caught in this real big problem right now, which is why a lot of people do say that the US economy, in principle, is going to collapse at some point. But it's always been collapsing because it always recovers. So even though we're like, oh my God, the US economy is going to collapse, guys, this thing collapses all the time. It has to. Expansion, contraction. All right? Now, just want to touch up on a couple of other things as well. Crypto. Apparently, it's going to be a monster $1.5 billion Solana short squeeze is on the cards. Going over into Solana price action right now, ladies and gentlemen, you can see that Solana has been getting violated. And of course, this story about the ETF is coming into play, but you can see that it's not really doing too well. Going into higher time frames, you can see that she's holding out well from these lows. And if this Solana ETF story does come into play, then happy days for Solana. We're going to end up seeing Solana making some nice big movements, potentially even getting above the 200 plus. And that's going to be a good thing, okay? Even more so to that story. Go back into it. Solana futures open interest, 7.4 billion on the ETF rumors. So, okay, this is where it's starting to get a little bit interesting. It's all going to Solana. And I heard earlier on that pump funds are actually being shut down again. So some arrests are being made as well. So any one of you like playing pump fund, just be very careful when you're trying to put money into that bad boy. But you can see that things are developing with cryptocurrency bright as day, right? And then, of course, meme coin, that's going to blast through the highs, according to a veteran crypto trader, SPX 6,900. Okay, so it's looks like it's going to explode. Happy days. But it's, again, it's a meme coin. If you catch it, you catch it. If not, get out. Don't waste your time. Now, going into other things, before we get into a bit of price action with Bitcoin, you obviously heard about this. Elon's trying to offer investment services and trading in the app itself, which is going to be very interesting because he's now going to have to go through lots of regulatory framework. Is it going to be authorized? He hasn't really got, I mean, yeah, it could be a good thing, could be a bad thing. Who knows? But X being X, man, I mean, if he manages to pull this off, then this will be a big money earner for him. Everyone's going to be on that platform, especially the crypto bros, because one way or another, cryptocurrency is coming into that as well. So that's going to be an interesting one for anyone. So once we know more about this, then happy days. We'll be diving into that bad boy. Now, let's get into some price action on Bitcoin. I'm going to keep it short and sweet again, like I said. So where we at? Higher time frames on Bitcoin. An update on the daily time frame for the holders. What you got in front of you is Bitcoin doing nothing, ladies and gentlemen. Nothing much is happening at all. All right. It's quiet on the ETF as well. Not really seeing any activity. BlackRock picked up something 16 hours ago. Let's just have a look at to see if there is anything right here. And I'm going to be getting into the Bitcoin logic of Arthur Hayes suggesting that Bitcoin is going to go to 250,000. He expects that price point. So I'm going to give you a logic on that, on what you need to look out for and be realistic with it. He says by the year end. Okay, then cool. Now, going into it all. So ETF, not much, no activity. There we go. Okay, an hour ago, Wisdom Tree or Flow Traders moved money to Wisdom Tree. Nothing interesting, not too excited. Right, now, Bitcoin. Flat on the daily. 5 and 13 EMA, these two moving averages right here. Make sure you like the stream, man. Where is it? Where are you? Where's everybody liking the stream? It's like, guys, come on, man. Let's get with the program. Anyways, so holding around this range. And whenever cryptocurrency gets quiet or there is uncertainty, I mean, when we've got this story about Israel, what's this? Israel, it was a mistake to say Bashir was hit. Okay. So look, whenever you've got uncertainty in the world, cryptocurrency reflects that. But whenever everything's fine, cryptocurrency does this as well. Okay. Now, that could imply that there's rotation. Like, are people getting out of crypto? Are they just accumulating, putting their money elsewhere? They're going to the NASDAQ. They're going to the euro. Where is it that they're going? Okay. But for the holders, you've got Bitcoin trading below key moving averages, but you've got it on the bigger picture, this key moving 50 EMA, which is a good support area for Bitcoin when you look at it. All right. When you look at the 50 EMA, you can see that it is in an uptrend, all right? And it looks like it's pulling back, all right? How long will they be pulling back for is a different story. Now, let me just go into the logic of Arthur Hayes' story of Bitcoin going to 250,000. At the top right here, you've got the ADR table, which is the average daily range. Now, if you want to understand what that is, go and take the free course on the Traders Reality website. All right. And it explains to you what the hybrid system indicators are. Just go to the top, click courses, and then go to breaking down the hybrid system. It's a free course. All right. And it explains everything for you. And of course, on the homepage. So if you click this right here, and it will take you through it all, and it will explain the levels, weekly, average weekly ranges, and what have you. Where is it? There you go. The ADR. And it's going to explain it to you how you can use it in your trading. Shut up, Tina. Now, check this out. So Arthur Hayes says $250,000 Bitcoin by the year end. The top table shows you the average daily range for Bitcoin in number of pips. Now, pips are the smallest change in price. So when you see Bitcoin right now at 104,624.46, when it goes to 47, right there, that is 1 pip. So the ADR for the day today is Bitcoin's either going to go up 311,443 pips or down to the same amount. On a weekly basis, because ADR is on the premise that price moves in threes. So it goes up, retrace, 2, retrace, 3. Okay? 3 times the ADR effectively means 934,329 pips. Okay? Remember, the smallest change in price. So from 48 right there to, oh, okay, there's a few pips right there, to a few pips movement upwards, 20 pips as such. That was the change. Okay? Now, the average weekly range for Bitcoin is 797,943 pips. Now, let's just go with what Arthur Hayes is saying from now until year end about a $250,000 Bitcoin. The average monthly range for Bitcoin is roughly 2,015,942 pips. Okay? So that's a lot of pips. A lot of pips. So from here to 250,000, let's go and take that logic and put it to the test. Where are we? Where's my thing? I don't believe it. Here we go. So from the current price point to 250,000, where are we? Still going. There you go. Just put it up to there. All right. So that's, in essence, 14,361,312 pips. Sounds like a lot. Okay. Now let's just take the average monthly range of 2.15 million. I can't even fucking say it, man. It wrecks my mouth. Bloody hell. Anyways, 2,015,942 pips. So that would put us right here. Okay. Roughly. Okay. So how many months have we got until the year end? What are we at now? We are in June. Okay, so July, August, September, October, November, December, 6 months, right? Let's do that again. Is it logical to say that Bitcoin is more than likely going to do that? You could make that assumption. Mess about with it right there, okay? 215,000 maybe. Yeah? On the assumption that banks get a little bit excited with this story of 9 trillion, all because of what's going on with the US Treasury market not demanding that banks have capital against their Treasury holdings. They're trying to inject liquidity. So by looking at that, is it possible to make that assumption that Bitcoin can do it in 6 months? It would have to move 2 million pips every single month to the upside. It has to just keep moving up. It can consolidate and then keep moving up. So that means on the 1st of July, Bitcoin consolidates, right? 9th of July, Bitcoin pumps up 500,000 pips, then consolidates. Then by the end of July, Bitcoin achieves the 2 million. That's your monthly average range, okay? So if it can do that in 1 month, you can then say to yourself, are we on track to continue? So if you're a holder of Bitcoin, look at the direction that Bitcoin takes in the number of changes in the average monthly range, or the ADR as such, okay? How many pips is it gaining to the upside, to the downside? And that metric's going to help you understand if you are in a cyclical wave up or down. Because if it achieves, for example, if we look at the average monthly range from Bitcoin right here, okay? So let's just take the monthly candlestick. Let's get rid of all of that. If the monthly candle itself is 2 million pips, right? Look at the range right now for Bitcoin. Let me zoom in for this just to put it into perspective for you. From its high to its low, what's it achieved? Its high to its low, it's achieved a range of 1,023,736,000, right? But it's pretty much flat in the middle, right? If Bitcoin stays like this for the whole month and doesn't move, that figure will pretty much be the same, okay? What we would then need by the next month is the expectation that if it were to trade above the month's high, then Bitcoin's candle, well, should I say Bitcoin's monthly candle, and it achieves it next month with the average monthly range of 2 million pips, would take it to 121,919. As long as it progressively keeps marking higher and higher, as long as it achieves its ADR per day, then you can scope the idea that on the monthly range, average monthly range, is more than likely going to achieve it. So when you see Bitcoin like right now on the monthly candle, it's taken its high, it's taken its low, all right? If you had looked at Bitcoin the day it made 110,667, you would have said, how many pips has Bitcoin achieved, okay? From the open, should I say, all right? From where it is. So you would then say, well, Bitcoin's only achieved 600,000 pips to the upside. You'll be thinking, okay, then if it's 2 million pips to the upside as its average monthly range, okay, we've achieved just a little bit of that, but not fully. I mean, a third of it, happy days. But we can't really say, okay, we're done and we're already at the start of the month. I've got to give it a bit of freedom. Then as you see Bitcoin's price continuously moving higher, it's fulfilling that story of the ADR, average monthly range. And you can then project yourself and be like, okay, confidence-wise, if I buy Bitcoin now, already in the last week or so, it's already achieved a high of 1 million pips to the upside, or 600,000 pips from its initial open. So it shows me that there has been progression to move higher. If its average monthly range is 2 million, when things are okay and Bitcoin starts to get traction, the story says that I should see Bitcoin from the open of the monthly candle finish by the end of the month at 2 million pips based on its average monthly range. That should take Bitcoin to 124,000. Sounds like a lot of math and a bit of confusion, but all you're doing is you're making it on the assumption of its average daily range, average weekly range, average monthly range. which in principle tells you that if Bitcoin on average just keeps on going up and up and up, you can use the metric of the average monthly range to gauge the idea that if it spends all month inside of this range and it stays there, you can then say, I'm not going to be buying Bitcoin this month because its average monthly range is 2 million and it's only managed to achieve 600,000 pips. That means there's no real movement in Bitcoin. I don't need to put any money to work. But if you end up seeing Bitcoin from now in this month, so what we are now, we're at the 19th right now. And Bitcoin at the end of, let's say on the 20th, okay, let's say by the end of, on Monday, right? By Monday, Bitcoin ends up making a nice move and it does go higher and it achieves its high up here. You would then add weight to the idea that 600,000 pips that have been achieved has got more weight because they came down and then they've now managed to trade positively and the ADR, average monthly range, is now trading positive. So you can then assume that liquidity is coming in on an average over a week, over a month so far, and you add more confidence to your trading or investing and say, okay, we've achieved 600,000. If it continues to do that, happy days, we'll move up to the next bracket. And you don't even need to even consider price action with this, because if you use the average monthly range or the average weekly range, average daily range, on the assumption that it trades positive from the open, you can then gauge the idea if interest is coming in with Bitcoin. Because if it keeps on taking pips on its average monthly range, you're then getting the idea that it's going to keep on marking higher. Does that make sense? Then what's the lowest Bitcoin can go by the year end? The lowest that Bitcoin can go by the year end, okay, is, okay, let's assume that Bitcoin's average monthly range is 2 million pips, okay? So from now, okay, till the end of the year, 6 months, right? So let's just take this right here and let's just get 2 million pips, right? That means, there you go, 2 million pips just to sum it off, right? That's 2 million pips. From the current price point, if Bitcoin were to go down from this monthly candle right here and go down 2 million pips over the next 6 months, next month, Bitcoin would be going down towards 87, all right? Do that again. 3 months. This is just on the assumption of the ADR, guys, okay? From the open of the month, 1 times ADR, 2 times ADR, 3 times ADR, okay? We want 6 because it's in 6 months' time, hypothetically. Right, it's not really doing the full thing, but you get the idea. Let's get 2 million. Bloody hell, I'm not doing that correctly right now, am I? Flipping hell. That is not correct. My days. Okay, then, because I'm not doing it right. Hold on a second. Let's just do it like this. 12 million pips. Let's just do it like that. What would 12 million pips look like? From the open. Bloody hell, Tino. Let's do it like this. This is going to be crazy. 12 million pips. If Bitcoin achieves a monthly ADR of 12 million pips, I mean, that doesn't make sense. That does not make sense. You can't collapse. You can't. No, surely not. 2 million pips. If it was parabolic, yeah, 2 million pips to the upside continuously. But that's not the case, okay? Because it builds up. It goes up and down, but progressively higher, right? But if Bitcoin were to go down for the next 6 months at 2 million pips, okay, it's not going to be looking good, is it? It's going to be going down quite a bit. Can we not talk about that, please? Let's just stick to the upside. But you get it, don't you? I'm not bearish. I am not bearish at all. I'm just trying to get you to understand that if the average daily range of Bitcoin, average monthly range of Bitcoin is 2 million pips to the upside or to the downside, okay? If Arthur Hayes is expecting Bitcoin to go up to 250,000 from now until the end of 6 months, okay? On the average, it does 2 million pips every single month to the upside. The logic says it's going to match up, okay? And it only needs to travel 2 million pips every single month to the upside. But you might not get 2 million pips every single time. You might get 200,000 pips. You might get 600,000. You might get 1 million, okay? and then it will start coming back down again. And then the next month will come into play where Bitcoin will then start moving up and then come back down and then start taking off from the previous month. It all depends. But if it was parabolic and it just continued, 2 million pips per month is okay. It's reasonable to assume from now until 6 months that it could achieve it. But it's when you get price projections are like 500,000 or 1 million Bitcoin in 6 months, in 2 years. I mean, 2 years. Could you achieve 1 million Bitcoin in 2 years? More than likely. More than likely 1 million Bitcoin in 2 years. That is a plausible thing based on how things change with cryptocurrency. So it's one of those ones. We're still waiting to hear the low. My maths lessons are dead, bro. Yeah, that ADR was pretty decent. I mean, let's look, how many of you believe that the 100K mark is never going to be seen again? This is going to be interesting. I want to know this. How many of you have the impression that the $100,000 Bitcoin will never be seen? Come on. I want to understand that. I didn't announce nothing. We're still waiting. Here we go. If ETH don't hold 2004, I'm screwed. Okay, then. Tino said Bitcoin to 1 million in 2 years. If it was parabolic. Listen, man, you guys complain if I say Bitcoin goes down 30 cents. I say to you, Bitcoin go to 1 million in 2 years, you're complaining. Well, that makes sense. It will. Up only. It will. We will see it one more time. I like that. I like that. One more time. One more time. If it hits it, it hits it. But, you know, it's nothing that we can be too concerned about. Sub 80, never again. Why? Why never again? That's what I really want to know from you all. Why can Bitcoin never go somewhere? If you can say it can never go to 80, then I can say it can never go to 200,000. Tell me why. Like, if you can say it can never go to 80, it can never go to another number that's higher. Why won't it ever go to 80? Why would it never go? This is what gets me interested with your comments. I'm sharing Tino's 6K. Man, shut up, man. Listen, I'll give you an XRP projection, ladies and gentlemen. Do you know what XRP's ADR is? I'm not even going to show. Actually, you know what? I'm going to show you. I'm going to show you how embarrassing this XRP ADR is. Jesus, man, that is disgusting. All right, look at this for an ADR for XRP. On average, it moves 998 pips, okay? From this point, it moves up 998 pips. This is ADR for XRP, right? That is its average movement. And this is the 8-hour chart. ADR, right, is 998 pips, okay? That is a lie. Even the math doesn't make sense, and math makes sense. That doesn't make sense. On average, XRP is going to move up that direction or down that direction every day based on its average daily range. And the math doesn't make sense. That's why it's such a messed up asset to hold, because you can't apply math to it. It doesn't make sense. I mean, we got an XRP format. I've got to stop with this. I can't do it anymore. It increases my blood pressure. It just messes me up. This asset is the bane of my life. Tina, do you still use TDI? No, I don't use the TDI. Yeah, I do talk about it in session 59. Yeah, I don't really use it, but it's good for scalps if you do use the TDI and you look for your V-shaped reverse. It's perfect for V-shaped reversals. But what you got to understand, when you've used something for so long, right, you end up seeing it happening without having to rely on that indicator. Like a V-shaped reversal is from the premise that price keeps on going down, down, down. You're expecting it to happen. You can visualize in your mind that there's going to be a V-shape. This live is too long. It really is. But there's nothing happening in the market. Nasdaq's just doing nothing. What was the story you heard about? Trump doesn't want war, never has. I don't know if Trump wants war and he never wants war, but like, come on. And I read an article yesterday talking about the idea that even if you do overthrow this Iranian government, okay, for years, the Iranian government have always wanted to dabble in nuclear power, nuclear weapons. So replace them with whoever you want. They're always going to get back onto it. That was this article yesterday, and he made a valid point about it. You know. What else? What else? XRP is the future, bruv. Buy up to 1K by the end of the year. I'm not doing it anymore, guys. I'm really not doing it. Any more questions? Because we are going to be coming to an end. Are you checking Forex this stream, USD? Well, look, there's not much really happening with Forex, ladies and gentlemen. You've got Euro, USD. You've got, let me just have a look at Bitcoin dominance for a sec. Yeah. So you've got, today is the worst day to trade because nothing's happening. You get excited about a little bit of movement. My concern right now is the fact that gold's not doing anything and you've got this war, okay? It's not doing anything. They've had the FOMC. Nothing's developed. Nothing has happened because investors already know there's really nothing else other than this big story right here. You know, that's it. There's nothing really to mark the markets to do anything. Here we go. With the Israel-Iran conflict escalating, JP Morgan warning oil could hit 130. How realistic is that scenario where the CPI jumps up to 5% and the Fed rate cuts? Chow, chow. I do believe, okay, and this is my 10 cents right here, okay? Subprime mortgage crisis. The reason why I make reference to that all the time is because there was a financial circumstance. It was a crisis, okay, that naturally encouraged investors to head over into commodities. That's what they do every single time. Investors will run to commodities in the state of fear, whether it's about a war, whether it's about finance, anything. Because if oil's prices are going up, that's going to impact the financial sector, all right? If there is a war, then oil's prices are going to be affected. So investors are going to go over to that, okay? It's realistically the true hedge when there is chaos across the board, okay? You think gold is a hedge, yeah, all right? But whilst everything was going up with regards to tariffs, why wasn't oil doing anything, all right? Because tariffs aren't really about how much oil you consume. It's about how much you're charging for the product that you're going to be sending there and back anyway. So oil doesn't move on tariffs per se, okay? But when there's something that can unfold, I mean, if you just look at this right here, where is it? I've just found this article earlier on. Where are you? I need to show you this article because it's a very interesting one. I don't believe it. I haven't got it. Where is it? Here we go. Look at this. Iran threatens to close the Strait of Hormuz, 20% of the global oil supply at risk. Do you understand what that is? That solidifies your $130 per barrel. If they cut that off, oil's prices fly. That's probably why Trump's the maybe, maybe not. What's the story with that? He wants $50 a barrel. Yeah, not now. Now you're going to wind up people. And the 20% of the global oil supply, oil's price is going to fly. It really will. Goodbye interest rate cuts. Hello inflation. Hello unemployment market going up. Companies ain't going to be able to sustain that. You're going to see companies laying off so many people just to make the balance sheets look good and keep investors happy. That's what's going to happen. Then you're going to get the unemployment rate going up. Go back and study the subprime mortgage crisis of 2007, 2008. Oil's price flying up to $149 a barrel. Bang. Once that was done and they declared the subprime, oil's price came down. They hedged themselves. Finished. This could be the start of it. I'm not scaremongering you. I'm telling you what's going on financially. You've got high interest rates, okay? You've now got you've got ease for banks to give out more liquidity. What the US deficit. Every dollar the US makes, they owe 126% on top. Most of the unrealized losses by banks is because they hold commercial and residential mortgage-backed securities with the rates so high. how people sustaining it. So if you want to know where you are in the economy, go and find out how many foreclosures have come into play, how many repossessions are coming into action. All right. You can find out all this information on the internet. All right. Go and study 2007, 2008. Tell me it's not the same shit all over again. Tell me that it's not that. Oil's prices are going up, high interest rates. What's the story? I mean, back then we had low interest rates with the subprime mortgage crisis, relatively low interest rates. Wait there. FOMC federal funds rate. Wait there. Let's go back. I mean, I'm going to be going back, like back. Here we go. We're close to it. Here we are. Subprime mortgage crisis. Okay. Sorry. Tell a lie. Subprime mortgage crisis. All right. Just the start of 2007, because it was in September 2007 to going into 2008 is when the crisis actually unfolded. Okay. And everyone was like, oh my God. Interest rates, 5.25% in that year. Okay. So are we in exactly the same situation or not? Fundamentally, high interest rates. And the reason why we got high interest rates was what? Inflation. Okay. Oil's prices are starting to go up. Why do you think they cut so quick? Look at that cutting. That was a quick cut. You know? So, NASDAQ, what are you doing? They said this will be worse. They always say it will be worse, but it's the same thing. They have to reset. When the reset comes into play, maybe you won't have a Bitcoin that goes cheap. Remember that. You might not, because people might just rush into Bitcoin. Because it's like, oh, the hedge. You know? But it looks like it's just sleeping. It's not doing anything. Can't even take its Asian session low. Zilch. Capiche? Tina, have you heard anything about Charles Hoskinson selling the ADA Treasury to buy Bitcoin? He should have done that a long time ago. Doesn't matter. Dollar is a world currency reserve and they just print. It's like having money printer in your basement. We are good. This is true. This is true. They'll just keep on printing. On paper, they're doing terrible. All they need to do is just get that paper that shows they're doing terrible and just put it in the bin and reset and come with a new piece of paper. Done. New debts, new rates. Great. That's how it works, guys. Tino bearish. You know what? Hit the like button, ladies and gentlemen. Go and enjoy your day off. And I will be tuning into you all later. Mad love and respect. Peace.